Hello and welcome to the FinTech Finance Virtual Arena. I'm your host, Doug Mackenzie, and on today's episode, we're going to be looking at how finance can actually go green. And I think it's such an important topic because of the ubiquity of financial services in everything we do. So I'm really excited to bring on with me on today's panel, we've got Craig Wellman from Microsoft. And Craig, before we go any further, how are you doing here today?
Doing good, Doug. Thank you very much for having me.
It's our pleasure, Craig. Thank you so much for joining. I'm really excited to hear your insights and Microsoft's position on this, because I think the two go hand in hand. Now we're in this technology phase of finance. We're seeing the coming together of these two organizations and these two industries. So with that in mind, can you tell us a bit more about your role at Microsoft, please?
Yes, absolutely. Yeah, thank you. So I lead the financial services business for Microsoft, which is predominantly the UK, but by virtue of the customers in this sector, it's a very international and even global operation that we have. We look after the relationships and co-author the strategies from a technical and development point of view with some of the biggest customers in the sector. So we get to work with big banks, asset managers, fund managers, payments providers, and of course the insurers as well.
Absolutely incredible. Now that is quite the all-encompassing kind of umbrella. So I guess you probably have quite a good insight into how organizations within the financial industry can actually track and maybe even take action against their carbon footprint. What are some of the low-hanging fruits that these organizations can tackle immediately?
Yeah, well, I mean, of course, this theme is developing rapidly. In my lifetime, we've been talking about data standards and we've been talking about green economies and sustainability and carbon footprints. And I think society has really woken up to the urgency of this situation and the challenge that we're all facing. And of course, we need business to wake up to that as well. And we can talk more about the role that financial services has in all of this, but they are thinking about it very heavily. They're very big data-driven organizations that have influence and control over the way businesses in turn and economies run. So action is starting to happen. And I think we're partnering alongside those organizations to try and help them understand how they do it. And I think there's three areas for me that stand out. The first thing is we're trying to help ourselves and customers understand, what does net zero actually mean, first of all? How do you get to it? When will you know that you've got there, and how do you measure it? And that's the second thing, like, how do you put the data together to actually understand where you are on that journey? We need to kind of simplify and streamline carbon accounting and management, including data collection, digitization, optimization. And it's incumbent on us to step into that with companies and help them. And I think, organizationally, if you're a bank or an insurer or an asset manager, the way you go to market and the products you sell have to reflect this change in sentiment and the objectives that we're setting ourselves. Green funds have to be green funds, and we need data underneath that can help us to understand that we can stand behind that and prove that these investments and products are truly sustainable.
Yeah. And that's going to be so critical going forward. Now, obviously, you've brought some really brilliant business cases forward there, but I'm also interested as well. There's obviously the regulatory aspect as well, and we're seeing that the UK government has introduced a 2050 net zero carbon emissions target. And I'm interested, is that feasible in financial institutions? You always think of it as a very white collar industry, but obviously, as we mentioned in the introduction, it's quite ubiquitous. It's everywhere. So is that feasible for these organizations?
I mean, I think, first of all, let's not underestimate the size of the challenge. We'll talk about Chris Brower's report, which we've worked with him on from Goldsmiths, University of London. And he surfaces some data points, which we'll talk to here, that tell us the financial services sector is a little bit behind at the moment. It hasn't embraced it in the same way as perhaps energy and other industries have. Yeah. But I think, urgency is the thing. We have really limited time now to address this 2050 goal. We're doing work ourselves in Microsoft. We've set ourselves a very ambitious set of targets around getting to net zero and actually being carbon neutral in the longer term. So organizations need to step up, take action, set goals, understand their current situation and what their footprint looks like, and actually implement strategies that are going to move the needle and change things. There is no doubt that financial services is one of the sectors that is in catch-up mode. And actually, if you look at the research, I think something like 16% of financial institutions say that at the moment they believe they can reach net zero by 2050. But we can course correct that. We can work together, and I believe that we can make a difference. In our first year since announcing our own targets in Microsoft, we've taken 6% off our own carbon emissions. And there's no silver bullet, that's not one action. It's 100 different things that you have to do to actually, squeeze carbon footprint down. So yes, it can be done, but it really does require planning and action now.
Interesting. Now, with that in mind, then, what are the strategies these institutions can take? Maybe you can let us know some of the ones that you did at Microsoft, for instance. But what are the grand strategies really to find a blueprint to get to that standard?
I mean, I think there's a few themes that stand out for me. The first thing I would say that in business and in economies and governmentally, what gets financed gets done, right? If organizations want to invest, if they want to borrow, if there are instruments available to financial institutions, whether they're lending and helping companies invest or insuring their assets, if there are ways that can be managed in regard of encouraging sustainability, it's going to drive behavior. And we are going to need a multitude of different incentives and applications and strategies to encourage organizations, particularly in financial services, to go in this direction. So, all of Mark Carney's work and thinking about sustainable finance and the way the industry encourages organizations to be more responsible, that's going to be critical. Yeah. The second thing is, big institutions in particular are they're huge. Their footprint in terms of carbon, from the point of view of property, of the way they work, of travel, the way they run legacy operations, they're built on the back of industrial and digital revolution. So, they're way out of date now. Those working practices are quite old, and they're going to have to be rethought and reimagined. And organizations are starting to do that. The pandemic has been a moment in time where people have started to rethink hybrid work, rethink travel, and a lot of the issues around it. So I think there are strategies in that regard as well. I also think, there's a bunch of other issues around connected sustainability, making sure that targets are set and that they're reported in the annual reports, and that actually the boardrooms really sign up to these things. Reducing exposure to sectors with high direct and indirect carbon emissions. Think about investment managers and fund managers. Again, I was talking about green funds earlier. Are the funds that you call green funds truly green funds? And do you have the data underneath that to support the fact that those funds are doing good and they're sustainable? And then I think there's a whole piece around funding and skills, allowing organizations that want to become more sustainable access to finance and policy that allows them to change their business model. And of course, to skill people in the organization to understand more about what sustainable outcomes actually look like. Yeah. And then, of course, the last thing I would say is supply chain, and thinking about your supply chain and how you make that as sustainable as possible. There are other things. There are many things that organizations can do in this area, but I think focus from the top, skilling underneath, and really starting to think about the products that you take to market, and making sure that they're sustainable for your customers.
Interesting. I think you've brought up some brilliant points, and we've started to see it here on the virtual arena as well. We've had, for instance, people from BNY Mellon looking at how to reduce any paper in payments, which is such a huge industry. Also looking at trade finance and providing, as you didn't say specifically, but a carrot rather than a whip, and enabling natural growth into moving into these sectors and moving into these ways of thoughts. It's a very interesting thought. And I wanted to put, so for instance, would hybrid working reduce carbon footprint for an organization naturally by the fact that they would then have less real estate or any need for it?
Absolutely. Well, travel. I mean, I think there's a win-win. People have realized during the pandemic that there is a rebalancing opportunity away from constantly being on a train, constantly being in a car or on a plane, through to balancing home and work, through to being more effective, through to reducing your carbon footprint by traveling less. And I think organizations now are starting to embrace, what does that mean for them? What opportunity does it create to be more sustainable? What opportunity does it create to have a more engaged workforce? Because that little bit of extra flexibility that perhaps you give them at the start and end of the week. But I think lastly, there is a huge efficiency opportunity for organizations there as well that are spending millions on travel that we know now really don't need to. They can balance those two things. I think there's an important point here as well around innovation. And what I'm talking to customers a lot about is how you keep an inclusive workforce in a new sustainable world. And what I mean by that is that if everyone's in a room, decision-making and innovation's quite an easy thing. Everyone's on a level playing field. If everyone's on a Zoom or a Teams call, the same applies. As soon as you move into a state where those meetings are happening hybrid, are you really drawing out all of the creativity and innovation for the people that are remote from the conversation? If they're not in the room, they can't grab the pen and whiteboard with you. And I think what we've got to do is start to think about how we include people and make those meetings different in terms of the dynamics, such that we still get all the creativity whilst achieving the objectives around, more sustainable and, sympathetic approach in terms of the environment.
Yeah. I think that's going to be so brilliant. And I love how everything that we do now is open to re-examination. And I can't think of a singular point in history post-war where that has just been the case. And it's a very exciting time to be in the industry. Now, with that in mind, Craig, I'm really intrigued by your insights on this question, and the fact that what can financial institutions do? We've looked, if I take myself back a sec, we've looked very much internally at these financial institutions, what they can do to improve efficiency in carbon reduction on their side, but how can they pass that on to their customers, increase customer engagement, as well as tackling their customers' carbon footprint?
I think it's a great question. Actually, you're right. There's an element of carrot and stick with any change that's so material, and let's not underestimate it. This is the biggest technological, societal change that we're making since the Industrial Revolution, right? We're going to have to reverse a lot of the bad that we've done and a lot of the working practices that have grown up, and really fundamentally change the way we lead our lives, the way we do business, the way commerce happens. But I think there are green shoots of positivity everywhere you look, because the societal change, which I would call the pull element of all of this, creating demand and awareness in particularly in young people that really are going to be here to live through all of this for the next generation. Yeah. And ensuring that they're aware of the impact that every decision they make, every investment they make, the loans they take, the cars they buy, the houses they buy, the holidays they go on, understanding the impact that actually has on the world and of course for their children and future generations. So I think there's an opportunity for institutions to step into that, to ride that wave of societal sentiment, but also to start to think about how you create products for people at home and for businesses that reflect all of that sentiment. I'll give you a great example, though, of the challenges that I think organizations are faced with at the moment. I was with a major insurer in the UK just the other day, and we were talking about business models, and we were talking about hybrid working, we were talking about sustainability. And this is one of the insurers that has gone very early on wanting to be a much more sustainable business. And there are a number in FS that have thankfully stepped up and said, we want to occupy that space. They're thinking about how they run their business, but they're also thinking about creating more sustainable products and attracting the people in the market that also care passionately about this. And the CEO was telling me that they're in terms of their business model. Imagine this company turns over $1 billion a year. they pay about 85% of that out in claims every year. That's pretty standard. You take money in, people make claims, you pay it back out again. And then of course, as that money passes through their books, they hedge some of it, they reinsure some of it against hurricanes and acts of God, and they invest some of it for longer term returns. So you will see with Aviva and many of the other big organizations in the insurance sector, they've got very active fund management and investment desks as well that do this for them. The challenge for them, as they start to switch away in that side of their business from investing in the best returns to investing in greener and more sustainable outcomes, is that at the moment the returns are not as good. And I think what we've got to do is stimulate through governmental intervention, through regulatory intervention, and by riding this sentimental wave that we can see in society now. We've got to improve the returns that can be expected from these organizations such that it's a no-brainer for them to go and invest in more sustainable outcomes. Then the investors are happier, the customers are happier, you run a more sustainable business. But until we reach that tipping point, this is going to be a challenge that I think they're facing into. Another example, actually, we've been working a lot with NatWest. This is a public case study for us. And Alison Rose, since she took over as CEO of NatWest, was very clear in wanting to create a more sustainable business. She's reimagining and reinventing the bank, all the way from rebranding from RBS to NatWest Group. And one of the things that we've been working with them on is our sustainability cloud, which effectively looks at data and transactions in individuals, in businesses and in market sectors, and starts to inform the bank on their sustainability footprint, their carbon footprint. So in theory, in an area where they are particularly focused, which is SME lending, they could start to look at market sectors or even businesses and say, how much of an effort are they really making to be sustainable, to be green, to reduce carbon footprint? And a bit like the iterative that I was giving there around Mark Carney's work, it will enable them to be more deliberate in how and who they lend to, which again, starts to create a new wave of financing for more sustainable businesses. So I think there's a couple of examples there, one on the challenge side, one on the opportunity side.
Yeah, and as you said, it's finding that tipping point, that balancing point, and then suddenly you hope that it would just run away with itself once all the stars aligned. Now, you've obviously brought up cloud technology. I brought up BNY Mellon's work to digitize payments in blockchain. If we could start to wrap up, because obviously we can't leave a conversation with you guys and not discuss the tech a bit further. What do you think will be the standout tech innovations that are going to be helping financial institutions reduce carbon emissions, help their ESG, their environmental, social and governance rating? Is it going to be cloud? Is cloud going to be the key?
I think there are so many, Doug. There are so many amazing advancements happening in the technology industry right now. But I think if I was landing on a couple, I would say, look, the first thing, technological advancement in itself is great, but really success in this area is all about data. And when I look at the financial services market, they hold enormous swathes of data on businesses, on us as individuals. And as yet, the industry is still on the journey of modernizing that data into such a state where it can reason over it, make better decisions, understand what's happening. There's been a lot of talk about artificial intelligence over the last couple of years, and other capabilities beyond that are really going to long-term transform the way that we make decisions and run these big businesses. But actually, until data is clean, it's impossible really to apply artificial intelligence, because you just make bad decisions faster.
Make the customer engagement worse.
Absolutely, yeah. So I think organizations are facing into this. They've accumulated pools of data in disparate areas of their business over many, many years, and they're in a process of cleanup to get it to a good state where they can start to reason, where they can put it into platforms, and of course into the cloud as well, and augment it in a new way. When I think about our clouds, and we launched the cloud for financial services this year, that starts to bring together our cloud capabilities across business process or business applications, Dynamics 365, people would know this as. Across the modern work stack, something Microsoft is very well known for traditionally, Windows, Office 365, SharePoint, Teams, and our Azure public cloud, it brings it together in one place such that you can leverage the great platforms like Teams, for example, or Dynamics, but you can augment the data feeds from the business application estate and host it in the public cloud. So rather than customers having to think about where do I go for that piece of data, it surfaces because the clouds talk to each other and because the capabilities underneath are augmented. And it's a way of us trying to step in and say, the technical capability is there, the data is there, it's been there for a long time. What's missing is the augmentation, the bringing together of those things to enable customers to make quick decisions, to practically apply the intelligence that they've actually built up over time. There are many things, but I think public cloud will play a huge role in this by virtue of the fact that you're centralizing power, cooling, the virtualization of compute and all of those things and federating it for the world, in effect. That's got to be more efficient. Doing it that way has got to be better than millions of instances of on-premise software and hardware, etc. running. So there is advantage there. I do think there's a big play around data, but I also wouldn't ignore the opportunity around hybrid work and how we start to control travel and real estate and all those things in such a way that we stay productive, that we stay innovative, but we also care about the environment when we make these decisions about the next trip we take.
Yeah, I mean, I must be taking about 600 less train journeys a year because of working from home, and so I there's so much. It's almost very plain to see, but when you drill down into the numbers, it becomes even more exciting and it becomes even more obvious. It's just how do you act on that? And I think that's a question for another day. And hearing all those insights, all those different innovations that you think are going to come together, Craig, it's been so brilliant. Thank you so much for piecing them all together for us and giving your kind of behind the scenes input really on how financial institutions are looking at this, at tackling this quite overwhelming issue, but also government regulation and obviously Standard coming in later on this century. So Craig, once again, thank you so much for your time, and also to our viewers as well. It's been an absolute pleasure having you, Craig. To our viewers, you can catch the rest of the series and much more over at ffnews.com, of course YouTube, but especially LinkedIn, where of course you'll see me in the comments. Craig, once again, thank you so much. Have a great rest of your week and speak to you soon. Goodbye.
See you. Cheers. Bye.